Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Dalmia Bharat. Our analyst has a buy rating on the stock with a price target of Rs 2,250, considering its industry-leading volume growth and improving cost structure over the next 2 to 3 years. In Q1, Dalmia reported inline consolidated revenue, while it positively surprised on operational profitability, led by higher than estimated realization and cost reversal. Management retained its volume growth guidance of 12% year-on-year for FY25, outpacing the estimated industry growth rate of 8% year-on-year. Operating costs are targeted to reduce by 150 to 200 per ton over a 3-year period. JP Associates insolvency comes in a negative surprise, delaying the medium-term capacity target of 75 MTPA by 1 year to FY28. The company remains committed to 110 to 130 MTPA capacity by 2031. Next, we have an update on IndusInd Bank. Our analyst maintains buy rating on IndusInd Bank with a price target of Rs 1750. The near-term business outlook remains comfortable, except for high slippages in the credit card and MFI portfolio. Slippages are expected to revert to normalized level, led by recoveries in second half of FY25. We expect stable ROA for the bank versus decline for some of the peers. Valuation are attractive. The stock has underperformed the broader indices in last 1 year, and it currently trades at 1.6 times FY25 and 1.4 times FY26 core book value estimates.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.